Well, nice rebound yesterday, right? And couldn't hold it overnight, but then TSMC comes to the rescue. A chip rally that's got us right back at old time highs here. Can we break on through to the other side? Other earnings to report. We will cover those. Travelers busting out up over $15. Not so healthy healthcare stocks. We'll talk about those. Is it time to start trying to buy the dip? 8:35, Frank Holmes will be coming on US funds. He'll be talking about the Jets ETF. Did you see that move in United Airlines yesterday? Special guest host for the first half hour of the show, none other than Christian Fromhertz. Let's get things started on this Thursday.
Welcome to Benzinga's Pre-Market Prep.
This is a volatile puppy here.
It's all about execution styles and strategies.
All right, good morning, traders and investors. Starting out with a solid green lead here, up 23 and a half handles, 59.1050. Can we make a new all-time closing high in the S&P? That would need to be above 59.08 and a quarter. Above it right now, buck down a dime, 103.30. Just been inching higher. Nice winning streak. Will it end today? Crude flat, trying to remain in the $70 handle at 70.36. Gold slightly higher, up 540 at 26.97. Silver a tad under 32, down a penny, 31.96. And Bitcoin taking a little breather here from that vicious 4-day rally. That's down $855 at 67,070. Filling in here for Triple D for today, at least the first half hour. That'll be Christian Fromhertz from Tribeca Trade Group. We will bring him onto the stage and also to lead us here through the show, AB. So, how you guys doing on this Thursday morning?
I'm doing well, Joel. It's Thursday morning. We've made it here. Like you mentioned, we are near all-time highs. We'll talk about that. Christian, how are you doing this morning?
I'm doing good. More movers again this morning. This market definitely keeping us on our toes. And by the way, great to be here, guys. We've seen this huge rally in small caps the last couple days, and just when you get comfortable in small caps, you got Taiwan Semi coming out and lifting all the chip stocks and lifting the Qs this morning pretty decently.
Yeah, so that will be what we lead with here this morning. So overnight, the futures were leaking a little bit in the red, and then TSM came out and reported. So obviously, the company overseas, kind of timing wise, comes in. It came in at around 2 a.m. The earnings EPS came in at $1.94, beat the $1.77 estimate. Sales came in at $23.5 billion, beat the $23.09 billion estimate. And here's why the stock is up so much, because expects Q4 revenue of $26.1 to $26.9 billion. That was against a $24.86 billion estimate. So they said revenue for Q4 is going to be about $2 billion more than what the market was looking for. And the stock responded by trading up more than 10%, or we're about up 10% right now, $17.50. And you go across the board to chip stocks, you name it, it's up this morning. NVIDIA, SMCI, ARM, Lam Research, LCRX, which, by the way, that one recently went through, or LRCX? Yeah, LRCX.
Yeah, that's when they had to split.
Went through a split recently, so that's trading at around $76, up $2.50. So haven't really seen kind of that post-split pop here that we typically see, but now it's getting a pop off this TSM news. Either way, that is what brought us into the green here. Again, NVIDIA very close to all-time highs at around $140 a share, pretty much right there. And I don't know. I mean, sometimes the market is very unpredictable. Sometimes it's kind of predictable. And guess what? Chips are hot. I don't know if you guys have heard that. I don't know if you heard that AI demand is hot right now, but chips are hot. TSM's up, and the rest of the chip market followed suit.
Is there some kind of an AI theme that's going on here? I'm joking. Sorry for the early humor this morning. But what I find interesting is just how quickly the dips are being bought. And if you want to bring up NVIDIA for a second too, because obviously there's such an effect on that stock. But notice how well it held 130 yesterday. It held 130 like a champ when the ASML news hit. And it's interesting because there was such a shock and a big move in ASML, but ASML did the same thing for the last quarter. And, the chips for the most part shook that off. And, again, I'm not a chip expert, but I do understand that they make different types of chips than an NVIDIA does. And some of the AI chips, they're a little bit more of a commodity, commoditized type chip. But I just thought that that it was that news in ASML was damaging for certain types of companies, but I thought in other names like NVIDIA that it was a buy the dip opportunity.
Yeah, just shrugged it off. I mean, really hard to do the technicals and TSM. You are trading well above the all-time high. The all-time high was made last week, so I guess we could call these old highs temporary support for now. The all-time high actually had three tops up there. We're way above that. That was at the 194 area. Boom, you did it. We just back there the other day. So there is a $10 gap now between where this is trading and its all-time high. If this is an area, if you were looking for post 200 for a target, well, you got that and some more on the bone. It seems to still be pressing higher. If you're short, I don't know what the heck to tell you. I guess the only thing you could hope for in the near term would be to come back down to this 195 area. But up $18, that's a big move. 3 million shares, they're pricing it in, and there just seems to be a relentless bid out there. Maybe wait for one or two red candles. But right now, that's up 9%. NVIDIA, there you go. You did hit the support in that yesterday. Now you're within an earshot of that all-time high. We discussed yesterday that it was making new all-time closing highs, but not new all-time highs. Well, that number today above 140, that comes in at 140.76. That's the only target that you had. But does this, Christian, I know this is well below its 200-day moving average, but boy, ASML shareholders, boy, they just must be really disappointed in everything that's going on. Is there a long-term position in here or something that you'd be looking at, or it's just kind of gone its own way in the chip sector?
I just think there's better places to be. The support level that I would be watching would be 712, and we're kind of through that. So the next major support level I have is down at 605. But my philosophy is always for earnings, and I think it's a good time to kind of talk about that too, because we're now we're basically getting into the heart of earnings season. But my philosophy is always when companies miss on earnings, they become, and again, there's never 100%. It's probably about 80% of the time. And unless they come out with a new product in the next quarter, they essentially become dead money for the next quarter. So that's kind of how I view this name here. And again, unless they come out with some new development, and that could be a chip or could be something else, because I did hear about that their part of the weakness was in China. So unless something changes there, and again, I'm more kind of shorter term thinking that basically the stock is dead money for the next quarter.
All right, before we move on from chips real quick, I just wanted to, this ASML, we're talking about it. When the dust settles, I mean, looking back now in hindsight, it's always a little bit easier. But so this is the headline from Reuters yesterday, or came out at 3:30 a.m. October 16th. So chip stocks fall as ASML's weak outlook raises concerns of non-AI chip demand. So when ASML's earnings come out, and then you get all these chips getting hit hard, whether it's NVIDIA, AMD, et cetera. I mean, the market, you can tell, kind of groups all these stocks together. But what's interesting is ASML's earnings show that the company was having weakness in, again, these non-AI chip segments. Exactly. So it really didn't give us any outlook into the AI demand from NVIDIA or some of the other chips. So despite the fact that the market hit all these stocks, again, in hindsight, it really shouldn't have, because ASML's earnings didn't give us any outlook into, again, how NVIDIA's AI demand is, how these other stocks. So again, I just found that interesting that, again, like sometimes the market groups all these stocks together when really there's a big difference between what's the AI chip demand versus what's this demand for these kind of like older, not cutting edge chips. And again, ASML is struggling not on the AI demand, but on these non-AI chip demands. So and I don't think NVIDIA should have gotten hit as hard on ASML's earnings as bad as they were.
I didn't either, and I bought some. I bought it on the dip, and I had owned it into, so I did feel the brunt of the move down because I already had a position. But I thought the same exact thing. And you got to remember, when an announcement comes out like that, it's a shoot first, look later, in terms of like, hey, it's in the semi group, and maybe it has, so I did buy some, and my level to trade against was that 130 that I mentioned. But I mean, that's an excellent point. What you came upon there, saying it's non-AI, I think was very important.
Yeah, I see the one other low in that area went just a little bit below it. The other significant thing was that was pretty good resistance back in August, broke down, and then when it finally broke through it, so your old resistance, new support track. Now, Christian, I know this was a stock that you gave us a long time ago on the magical run on the way up, and then all the bad news here, but it's the laggard of laggards. You still have the investigation going, or we still don't know what's going on with the accounting, but give us a setup here at SMCI going through $50 here. Well, I mean, that 200-day moving average has to be way up there, Christian. But I know, just wanted to get your comments on this one. This was an old favorite of yours.
Yes, I mean, absolutely. This was an old favorite of mine, and old is the correct term there. I have not really done much with the stock recently. I actually had it on for a day trade yesterday, and we did see some speculative option activity, but I took it off. So that's the way I kind of think about this name right now. Could be a short-term trading opportunity, but I particularly don't like when either the Department of Justice or some other regulatory body is investigating your company. I don't think that to me, it's not worth the risk. So I have not really done anything in terms of, since since they started with, when there were short reports on the tape and so forth, and investigations, I've just kind of stayed away from it. And really, once it broke, I think it broke its 200-day moving average. I don't want anything to do with it. Now, if you're a speculator, we often talk about, trading stock versus options. I think the best way, like if this is something that you think is like, you think that this is a buying opportunity, instead of trading stock, I would maybe trade options, because you could only lose the premium. We don't know what's going to happen. Maybe they come out with their new filing and their stock goes, their delayed filing or whatever, or some new announcement that could get the stock back going to the upside. But there could also be, where there's, what's the expression, where there's smoke, there's fire, I guess. So I would not be comfortable holding the stock or a big position in the stock. And I think options are a great way to go here, because if there is something else that comes out that's negative to the downside, you only lose the premium.
All right, we're going to transition here from a healthy part of the market in the chips and AI demand to a not so healthy part of the market, and that is in the healthcare space. So we're going to talk some Elevance Health, ticker ELV, an insurance play, reported earnings this morning, and not great. So EPS came in at $8.37, missed the $9.66 estimate, so a miss by $1.28 there on EPS. Sales came in at $44.71 billion. That beat the $43.3 billion estimate, but they gave some soft guidance for fiscal year 2024. They declared a $1.63 dividend. So either way, it seems like the same thing that was hitting Humana a few months ago. If you guys remember the big sell-off in Humana is hurting these other insurance stocks. So Elevance's stock went from about $500 a share down to about $430 a share after this report. It's trading down currently about 60 bucks, 12.1%. And you can go across the board here. UNH, CNC for Centene, all of these healthcare stocks are getting hammered on this ELV report. And I don't know, we were talking about it on the pre-market show. Someone in the chat might be able to help us out here, but there was some change to how they're doing the rates for insurance companies or Medicare or something. That was the original thing that hit Humana a couple months ago. And I mean, the insurance industry and how it all works here in this country is so like convoluted. I'm pretty sure that's what they try to do, is they try to just make it so complicated that none of us can understand it. So I don't really know exactly what the change was from the administration that caused Humana stock to get hammered that hard. But it does seem to be impacting this whole industry. And UNH, again, reported earlier this week, that sold off as well. So a lot of weakness here in the healthcare space.
Yeah, I mean, and I think once you have, if it's, Humana, as you mentioned, was the first one. And, that could be, you don't know if that's like a one-off or if it's a company issue, but you just had UNH report earnings earlier this week. And usually it's like a bellwether. It's such a strong, good company. But when you saw UNH trade all the way down to like 550, 560, and that's kind of where it's sitting right now. Yeah, it just tells you that that's something. And again, like I agree with you. I'm not in the weeds in terms of understanding like Medicare and Medicaid and all of that, but something's not right in this group. And for now, I think you have to let the dust settle a little bit.
All right. Wow. I have to go to this Elevance. I mean, here you are. Good day yesterday, and then you got smoked here. Traded down. I mean, the only thing I can do on something like this is very complicated, the Medicare situation. I'll just get a little technical here on you, and I'll go back to some monthly charts here back in August and September. And you had two monthly lows right at the 433 area, another monthly low just above it. You did get a bounce. Am I going to say the low of the day is in? I can't say that. I can't guarantee you that. But when I see it bounce off a monthly support area and then you distance yourself a little bit from it, if I had a short or if I had was trying to be a long in this stock, if it came back towards that area, I'd be attempting to bring in some shares. It's a big move. I mean, the bottom of yesterday's range is so far away. Don't know if we're going to see that today. Also, just taking a little bit of a cue from the Humana on that smoke. Well, the first day, you shouldn't have touched it the first day. The second day, you get a little bit of a bounce. But Christian, I want to ask you, I mean, you look at this thing like UNH, and we saw the Humana news out, and Dennis were like, wow, if you're owning a stock, it said 600. It actually went up after that. To me, I mean, you can't throw the baby out with the bathwater here. And of course, not knowing all the peculiar, the details of what's going on here. Wouldn't you be a little bit nervous owning this stock?
Yes, yeah, absolutely. And, these types of moves, they're large moves too. So it takes a while. Like it's almost like, these names, when they report earnings and something negative happens, it's not gentle. It's almost like a shotgun. So I think, like I said, you got to let the dust settle a little bit, at least and again, we're going to get a lot more earnings reports coming out, but at least when there's a negative report that comes out, it's called the 3-day rule. I like to wait the 3 days for it to settle in. And then after the initial shock, and in this case, it's a pretty big shock to all these companies, see if buyers start to come back in after that initial shock of the 3 days, let people kind of forget about it, because people will, we're going to be on, we've got Netflix after the close today. We've got a lot of big earnings reports. So once that initial shock wears off, I want to see if the institutions come back and start supporting this name, or going back to the ASML example, it could be dead money for a bit.
All right.
Or sorry, go ahead, Joel.
No, I mean it's the leader, laggard, laggard, leader tree. Trying to pick up the laggards is end up with laggards, and when you pick on the leaders, sometimes you regret it.
All right, we're going to move to some other news here. This morning we've got an Uber. So there was a report from the Financial Times. And this is kind of interesting because it's going to test our media literacy here a bit because so Uber is trading down. Expedia is trading higher on reports that Uber is exploring. So here's where it gets weird. Financial Times reported it with the headline in past tense. It said Uber explored a takeover of Expedia in past tense, kind of implying that they explored it, but it's not happening. Now other people picked it up and they changed it to Uber is reportedly exploring an Expedia takeover. So Expedia is trading higher on this. Again, a report from the Financial Times. Expedia is valued at $20 billion. Reported its highest ever annual revenue in 2023. Uber is trading down on this news, and we kind of see that a lot sometimes where the company that's supposed to get acquired trades up, the company that's doing the acquiring trades down because people speculate the company that's doing the acquiring may need to do it with some shares if it's not an all-cash deal. So the company's CEO, Dara Khosrowshahi, may have to sit out deal discussions, the article says, because he used to be the CEO of Expedia, and then now he is the leader of Uber. So there's kind of that connection there between the CEO that used to be an executive at Expedia, now at Uber. Again, I can't tell if this is ongoing discussions or if Uber just explored this and then decided not to do it because the Financial Times article is behind a paywall.
Interesting. Very, very interesting. The thing about this, and sometimes you wanna like to poo rumors on takeovers and stuff. I don't know exactly what they would want. I mean, if they have extra cash or looking to expand, maybe the former CEO sees things in Expedia that he would do differently to make it a profitable company. But the way, to me, this thing has some potential legs. The fact that the former that the Uber CEO was at Expedia, so maybe he sees something in the weeds that makes the company's good value. So I'm not gonna poo-poo this rumor. You did get a big pop up to 164.85. Very hard to talk about technicals when something's in play here. It's fresh. It's hot rumor. It's out there. We'll see what the street does with it. Christian, how do you approach news and items like this?
Yeah, I mean, well, it's kind of interesting because Uber has had a tendency to want to expand. I mean, they've done things like Uber Eats, so they have expanded. So I wouldn't put it past them. It does seem a little bit aggressive to do something like this. And I think also, like, you're bringing up the Uber chart, and I was kind of, I've been looking at this to see if it on your chart on the upper right, if it holds that gap. I'm kind of, somewhat interested here in Uber, and it doesn't look like it's moving that much pre-market, at least with Expedia. Another thing, just to kind of take this from another angle too, I think Booking, these companies are strong, and I know your guest is going to be talking about the airlines and so forth. But I've been liking what I'm seeing in terms of these travel companies. Another one too that got hit a bit was I think it's Map My Trade, MMYT. So it kind of just shows that this travel group, we've seen the cruise lines do pretty well as well. So these companies all are pretty strong. So it's going to be interesting to see if we hear any more about it. And I didn't read the article either, but I think it would be quite aggressive. But I wouldn't put it past them either, because, like I said, they've done some aggressive things. But I think it's too big of a buy. So I would not personally be going after Expedia thinking that this is actually going to happen. But that's me.
Yeah, you mentioned strength just in this travel industry, and you can kind of go across the board here, whether you're looking at, Marriott, Hilton, the cruise lines. There's strength in all of these. And I mean, we've talked a lot about over the last couple of years a potential slowdown in the economy, a slowdown of spending. And like, I would think travel is one of the first things that if people were trying to save money, they cut back on. Okay, maybe we don't need to go on that cruise. Maybe we don't need to take that flight out to, you know, the Bahamas, whatever it is. And so far, at least from like the earnings of these companies, we haven't seen that whatsoever. And, you know, again, just this whole industry, you look at Marriott stock, Hilton, Royal Caribbean, they're all basically at all-time highs. So, yeah, if you've been holding these stocks, then you're doing pretty well.
The question is,
sorry.
So I was going to say that the question is too, like, you know, think about like what they're, you know, what they're thinking in terms of buying Expedia. Like, you know, are they going to get you to the airport, and then, you know, is it going to be like an all-encompassing ride? You know, from, you know, getting you to the airport, you know, you book your trip on Expedia, and then, you know, maybe Uber picks you up right after that too and takes you to your destination. I kind of like that thing, but, you know, would like that in terms of my trip to go, you know, a bit more efficient and seamless. But I have to say from a consumer standpoint, I wouldn't mind that. But like I said, it would be a very big purchase.
Would it be? I don't think there'd be any antitrust issues with this, right? I mean, well, I guess there's antitrust issue with just about anything, you know, that deals come across the table. But I mean, the other thing, just with Uber, I mean, it just seems like a smart. I mean, they've had such capital appreciation. They got this money. They probably never thought their stock would, you know, beat where it's at, and now to expand the business. I mean, I'm not going out and buying the stock, but I wouldn't be surprised. This one could have some legs. The only technical note I wanted to make here on Uber is, you remember what this big, ridiculous green bar was right here this day when it went to $87, traded 57 million shares?
What day was that?
Christian, you remember?
Well, I want to guess. I was asking like what the actual date was.
That day? Oh, the actual day was October 11th.
Oh, that was the day after the robo-taxi event.
Yeah. Yep. People got a little bit excited about, oh, this is so great for Uber that, you know, Tesla is a little bit farther behind. So you had a little bit of irrational exuberance on that day. And
just having some tech issues.
Okay.
Looks like Christian's having some tech issues. We've got numbers coming here in a couple minutes.
Yeah, go ahead.
Yeah, so this morning, we haven't had some econ data in a few days at least. So we have initial jobless claims coming out. The expectation is for 260,000 jobless claims. U.S. retail sales, the expectation is for 0.3% growth in September. It was 0.1% previously. So we're expecting to see data that indicates a resilient consumer, strong spending in the month of September. We're also getting a Philadelphia Fed manufacturing index that comes at 9:15, so that we will not be on for that. But again, initial jobless claims, retail sales, coming to you live here in 1 minute.
Okay, well, we just went up and we came within 1 point of the all-time high in the S&P. We got to 1750, 1850 is that all-time high. So that's the only thing I can give you, folks, is potential resistance here. I did see something come across my screen. I think the ECB did lower rates again, so kind of going a little bit different direction than the United States here. But retail sales here, I mean, looking at all those airline stocks and everything, they're looking good. They're looking frothy here. Christian, you want to be back on for this number, or
yeah, I'll stay here for a second. The number that they're looking for,
we're going to bring on Frank Holmes on. He's going to talk. I'm sure he wants to talk about the Jets, Jets, Jets. Here we go. We're waiting. Survey says we're bouncing around at the all-time high. Right here, 18.5 is your all-time high. Maybe got a few buy stops in there.
Retail sales for September came in at 0.4%, 0.4% versus the 0.3%. It was hot. People are spending money here. It was 0.1% prior in August, so you see a big uptick in month over month. Retail sales for September, U.S. jobless claims came in at 241,000. So that was less than the 260,000 that it was prior. U.S. core retail sales for September. So core retail sales came in at 0.5% versus the 0.1. So that one was kind of super hot there. I don't know what the core, what they take out for core. That might be excluding vehicles. Let me see what it is. Yeah, I'm not sure. So the retail sales minus autos. So that came in at 0.5% there. All in all, strong consumer, resilient spenders.
X auto and gas is 0.7 versus 0.3. So these are strong numbers that came in, beating expectations.
What are you buying, Christian? What are you going out and buying?
Man. Is going to book some trips. You got to book some trips on Expedia.
There you go. All right. Well, Christian Fromhertz, again, Tribeca Trade Group. Always great to have you on Pre-Market Prep. Thank you for hopping on and guest hosting with us this morning. Great job, man.
Always a pleasure, guys. Take care.
All right. Thank you, Christian. Jose, I mean, there's not much technically I can give you when there's not much technicals there. I said that 1850 was Monday's high, all-time high. Obviously, there's some offers there, but we seem well bid here at this 49, 14, 15 area. So although we didn't bust out, man, it still seems at this moment we're raising a bid. Well, I have this knack for bringing on guests at a particular time when sectors get hot. And with a guy like Frank Holmes, he's a busy guy. I got to schedule him months in advance because he's flying all over the country, doing all these things with his company, US Global. But we got him on today, and there's not a better day to talk about the airline stocks. Roll the intro, and we'll bring Frank on. All right, Mr. Frank Holmes. We all know him from his work with U.S. global investors, covering a lot of different sectors. Frank, look at you, man. I like it. The Jets ETF. You got the sunglasses on. You got the red dinosaur in the back here. How you doing today, Frank?
Outstanding, and I miss you, Joel. Te extraño. Long time. Don't chat.
All right, let's just start about this move in United Airlines yesterday. I don't think I've ever seen a move like this in United Airlines. We can talk about that. We can talk about Delta. I mean, for years and years and years, people are like, oh, airlines, you can rent them, you can't own them. They're very, up and down, up and down. But here you are. I mean, is this just a sustained trend here and a glimpse of the future here in the airline industry?
The sentiment is still so negative, and we saw that on research going back 30 years. Whenever you have an inverted yield curve, sentiment towards the airlines is just negative. And it's interesting because a couple of weeks ago we did a webcast, and usually we get 400 to 500 RIAs, and we had less than 100. But jets continued to climb. We had record pre-COVID numbers peaked at 2.5 million people being cleared by Homeland Security. And this summer hit 3 million. So there's more people traveling. The price of tickets are up fourfold. They're not up 20%. They're up fourfold. And so they have tremendous pricing power. So the airlines, you've got to climb through that. And now you're getting the activists like Elliott Management going after Southwest Airlines. If you look at the revenue growth over the past year and 2 years, it's bigger than the stock market. Their EBITDA is bigger than growth rates, bigger than the overall S&P. And mathematically, in the last quarter, which we're in, the airlines usually soar, no pun intended. So I really think that it trades against, it's a great contrarian trade. If we go back to pre-COVID, jets was $33, $34. It fell down. Huge assets came in. It went up to 28, fell back down on negative sentiment, and now it's starting to climb back. And the short position on the airlines is huge. Look what we saw with United yesterday, mentioning a big stock buyback, and then you get this huge short covering. So I think that a lot of the hedges are basically short the airlines. We know that some use jets as a hedge. They go long jets and short various numbers. But I think odds favor mathematically seasonal patterns. It trades, and it's going to trade like many of these other stocks pre-COVID numbers. And that's another 50% potential rise.
What so these you said fourfold in the price and the increase in the
Of
price?
tickets. Yeah. I mean, flying to Europe, there's no discount a year out, none. And this happened. I mentioned this 9 months ago. There's no discount 12 months out. There's no discount. They will cut back paths and routes for you to fly so that they maintain these high price levels. The other positive note is oil. Whenever oil is falling, which has been slowly declining over the past year, it's very bullish for the airlines industry. The last thing, Joel, that I've discovered this past summer was called digital nomads. Now, I heard about the north-south, and we call them snowbirds that leave Detroit in the winter and drive to Texas or Florida. Well, what we have today, especially after COVID, there's about 30 million young people that are consultants and coders, and they fly south. They know where to go to Airbnb. They fly to Colombia, Medellin, because it's a big hub of tech coders. They go to Cancun. In Europe, they're all flying to Spain because Spain's infrastructure is much stronger than Italy or Greece. When you're in Asia, the Japanese and South Koreans, they're flying to Thailand. They're going up, and this is where they're doing their work and their consulting. 30 million people. This means there's big traffic in the fall and in the spring going south to north.
Ah, you got a new term there from for snowbirds. Let me what
And
about
Joel, I'd like to add to that, which shocked me was on Reddit. On Reddit, there's whole sections on how to get additional jobs if you are a digital nomad.
new term here on pre-market prep, digital nomad coming out of Frank Holmes here. Frank, what about the damper in the Mideast? I mean, restricted travel over there, or people just choosing to go other places and avoiding any potential dangers?
No, I think that the people still have this psychology of pent up demand to fly. I was at Park City on the weekend, and there was no empty seats. I flew to Europe a couple of weeks ago, no empty seats. So wherever I fly, it's packed.
All right. What about and now? You were talking a lot on previous shows that really what the airlines, needed was for business travel to come back here. And what is the state of business travel? You have Zoom, you have Teams, you have all these things to do it. Is the lack of business travel is that being made up by your digital nomads?
Joe, that's a good question. What we have seen is a pickup in business travel because of the leadership with guys like Elon Musk saying, if you want to work for home, you have a job. But if you want a career, you show up to work. And that is being reiterated by many CEOs. We've seen a lot of big skyscrapers in downtown cities basically to have to go through a big change of people not coming to work. And I think that's turned because we're seeing more business travel. Conferences are packed. The biggest thing where I saw this early was the Bitcoin conferences. I mean, they were just 30,000 people 2 years ago in Miami, 30,000 paying $1,000 a ticket. So that something big is happening now in business travel. Business conferences are sold out. If you don't get your ticket for the NVIDIA event coming up in Atlanta, you're not getting in. Same thing with Vegas. I went to the Dell event and it was oversold. 10,000 people.
So Frank, when you came on, you had these Bitcoin glasses on, and a lot of people, that I talk to are either, they're either gold bugs or they're Bitcoin maxis. They love crypto and they think they're kind of pitted against each other. people that love Bitcoin and people that love gold. You seem to like both. How, like, do you see a scenario where both keep moving higher, Bitcoin and gold?
Yes, I think the adoption of crypto is going to continue. You've got to remember that the network was built not by any central authority. It's incredible that Bitcoin has no CEO and no direct funding, and it's $1 trillion asset base, 1.4 trillion. The digital realm of around the world, I believe, got ignited by gamers. If in my journey of launching the first crypto mining company in the world was Hive. It still is out there, profitable, and it's branching out the AI business. But we were mining Ethereum at the beginning, and Ethereum had 30 million kids that were turning on their GPU chips and going to bed after they turned off their game, but they ran mining Ethereum, and they would get 1 to 2 coins a year. I had a paper route in the snow. Like in Canada, in Toronto or Detroit, you know what it's like. It's cold in the winter. Well, they don't have that. They sit there and they play their gaming and they use those GPU chips to mine Ethereum. Ethereum's gone now, but the crypto ecosystem continued to flourish. And the adoption process will continue because of MMT. If we look at modern monetary theory, the beginning of this century, of using printing of money for every reason by governments, you have seen the price of gold outperform the S&P almost 2 to 1. It shocks people. Now gold's making all-time highs. It really doesn't matter who's going to become the next president. It's just a matter of who's going to print the most money, and other countries around the world. So the idea of an alternative asset for gold bugs is, no doubt gold's making new all-time highs, is sort of capturing that we ought to have gold. And then we have a global currency battle with China and Russia, with other companies, with BRIC countries, gaming up to try to go after the US dollar. Well, they're big buyers of gold. No other countries are going to accept their currency. Why would you ever accept Chinese currency? It's non-fungible. People can't, there's foreign currency controls, there's social media controls. It's a closed economy. The only way it has any validity is to have gold backing it. So we're seeing this happen in this world. So all of a sudden gold gets that fear trade. But we also see, most important, 60% of gold demand is for love. Well, that idea of love is different when it comes to gold. It's very unique because it relates to jewelry demand, and it relates to GDP per capita in rising China and India and the Middle East. But most important is the Bitcoin system. It's the new generation. It's the Generation Zs. It's the millennials that are used to using digital currency with their gamers. They got upgraded. They got a digital money. That will continue. And what I see more and more, where I spoke beginning of this, is the printing of money. So the use of MMT, since that has become embraced by the G20 nations this century, we have seen gold far outperform. And since 2009, when Bitcoin was created and released, we've seen it far outperform everything else. So the digital realm shows up today in the huge surge in looking for nuclear energy. All the greenies, I'm anti-nuclear, I'm anti-nuclear. Germany shuts down all those nuclear. It all changed this year in March when Amazon turned around and said they're going to buy nuclear energy. They need 1 gigawatt of electricity, and they spent $650 million for 900 megawatts in Pennsylvania. They're going nuclear. Now you're going to have modular nuclear plants showing up everywhere as they need for the digital economy. You're going to need more data centers. And we're seeing what's called hyperscalers. So I know this well because Hive is involved. Hive has 130 megawatts going to 230 megawatts. We are building out our AI business. We were first to have an AI strategy because we were using GPU chips to mine Ethereum. We took that and repivoted for the AI boom. And since OpenChatGPT, it's exploded. And you take a look at future multiples on data centers, they're 20 times EBITDA, 20 times, not 6 times or 8 times. So the thirst for stable energy is very real. And I think it's very bullish for data centers and for anything that touches the digital realm.
So to recap, Frank, do you think this idea of MMT as we continue to kind of put more money into the system, there's a scenario where gold and Bitcoin can keep moving higher together? It doesn't have to be one or the other.
Correct. Absolutely. And other alternative assets like limited editions of Picasso, limited editions of Andy Warhol, they've all seen this continuous rise as a way to protect against excessive money printing.
Yeah, well, and I know MMT proponents, Stephanie Kelton, et cetera, will say that, a lot of the effects of this monetary theory will lead to appreciation in asset prices like Bitcoin, like gold, like fine art, like you said, but won't lead to an increase in inflation and CPI. So, I don't know how that works, but it sounds pretty nice to me.
Yeah, but it doesn't. We saw what happens during COVID with the huge amount of money printing, and the Federal Reserve here had to do reverses and take that money out of the system to get inflation down. So inflation has come down. How long will it stay down will relate to both interest rates and money printing. When we look at government policies, it's a binomial model. It's like zeros and ones. It's monetary or fiscal policy. Monetary bifurcates again into money supply and real interest rates, that is after inflationary rates. And over here are fiscal policies, tax and regulations. So the bigger the imbalance between these fiscal policies and monetary policies, the more significant alternative assets like gold for conservative investors, most of them my age, and young investors like you guys are going into crypto assets, in particular Bitcoin.
All right, Frank, let's move on here to the miners. They really haven't participated. I know you have your Hive here. Even Riot and Mara not really participating here. Give us a bullish case here for these miners.
Well, it's interesting for me to see that the miners are going to go through what I believe what happened with gold stocks and gold. In 2003, 2004 was the creation of the GLD. And the GLD was the bullion ETF. And as money went into that bullion ETF, the gold stocks started to bifurcate. And that is, gold stocks kept just issuing stock for the sake of growth, but they weren't really growing revenue and cash flow per share. So the magic number is going to be, I believe, is going to happen here in the miners. They're going to have to demonstrate the growth in revenue per share, like the airlines are showing right now. And they're going to have to show cash flow per share growth. If we look at Riot and CleanSpark, they've issued something like 300% of their stock in the past 18 months. So there's been huge dilution, even though their market cap is bigger. The long-term value metrics, I'm pretty happy with Hive. It has the lowest G&A. It's like a low expense ratio ETF. It has the highest consistent returns. When all Sam Bankman fried the crypto industry a couple of years back, we still made money that quarter. Most of our peers didn't. So I'm happy with what our strategy is as Hive. And I think we're undervalued, especially when you look what our AI growth and contribution has been. We will double our Bitcoin production. That's our vision over the next 12 months going into Paraguay, because we're only green energy. And that's been really a challenge to find big buckets of green energy. And we have found it in Paraguay for 100 megawatts. We are 130 megawatts spanning from Sweden and Iceland and Canada. And we like that consistent green energy.
All right, Frank, two more things before I let you go. I know you're focused on the gold. Just give up on silver for the catch-up trade. I mean, it just nowhere near its all-time high of $50, however way you want to look at it. What's silver? Is it just it's just going to be the perennial laggard?
I love silver. It's a warrant on gold, and it always has this 50% more vol than gold. If gold goes up 20%, you're going to see silver go up 30 to 40%. Just that's what happens. Vice versa, it corrects more. But the nice thing about silver is that what we've witnessed for the past 18 months is the silver price for physical silver is substantially higher than the futures price. There's like futures depression or some say oppression in that futures price because you can't buy physical silver. Physical silver is much higher, and that hasn't gone away. So I think that silver trades much higher. There is a shortage of coins. A lot of stores do not carry even pennies and nickels ever since COVID took place. And there's been a bigger interest in buying silver coins in case something really bad happens. And that's the fear. I don't bet on that type of fear, but silver is this unique asset. But more important for silver is its industrial use is much greater than gold. And this movement and this infrastructure has been for solar panels is the big demand for silver industrial use are solar panels and solar energy. And I don't see anything slowing down the growth and the need for energy, and solar panels is going to be a key government spend.
All right, one more, Frank. I don't know if you want to make any comments on Boeing here. In order for the airlines to fly, they need planes. I mean, this company, a lot of bad news, an offering, convertible offering. What any comments on Boeing, BA?
Yeah, I think that Boeing is no doubt has tremendous tensions inside between the union, so powerful, management appears to have made so many missteps, maybe incompetence or arrogance. I don't know. Definitely not from Jim Collins' book, From Good to Great. But they are basically an oligopoly with Airbus in Europe. So I think that there'll be probably some significant changes take place. They also have to wrestle with the FAA. So I think that they're going to go through this catharsis. There's going to be some form of a restructuring, and I think that the need for those jets will help get the pricing down. That what you're seeing is that there's a need for those new jets, and I think that there's lots of pent up demand for new jets that are especially more fuel efficient.
Okay, Frank Holmes, you guys know him. He's the CEO and CIO of U.S. Global Investors, covering the whole gambit here on PreMarket Prep. Frank, thank you very much. We'll dial you up again soon.
Look up. That's how high prices are going.
Okay,
There
thanks,
you go.
Frank.
All right. Thank you, Frank Holmes. All right. That was Frank Holmes, the guest, of course, from U.S. Global ETFs. They got JETS. They've got GOAU, the U.S. Global Go Gold and Precious Metal Miners, and then SEAC, the U.S. Global Sea to Sky Cargo ETF. Always fun to catch up with Frank. All right. We've got a few minutes left. We've got some news. Lucid did an offering. The stock is getting hammered, bringing down some of these other Chinese EV makers as well. So Lucid is doing, look at the details there, a offering of approximately $1.67 billion. This is coming from investment from the PIF, the Public Investment Fund from Saudi Arabia. So again, Lucid getting hammered on this news, down about 19%. You go to NEO, you go to XPeng. This whole sector of Chinese EV stocks is getting hammered this morning.
Yeah, I mean, look at the offering price, use that as potential support. I mean, these companies just seem to be on life support. And then they get life support, and then they're back at it. So Tesla been holding real steady in here at consolidation. I just wanted to mention this is a really quiet 4-day range here in Tesla. So looks like it's getting a little bit trying to break out to that 224.26 and then start to fill the gap from Robo Taxi Day.
And then, all right, another thing that I wanted to discuss this morning, saw some people in the chat talking about it as well, and Frank mentioned it too, is the nuclear trade starting to heat up. We saw Oklo yesterday, OKLO, which is, of course, the Sam Altman-backed nuclear startup that was previously a SPAC went up 42% yesterday. Joel, $4.89. This was, of course, after the news that Amazon was signing another deal with, I think that one was with Dominion Energy, but either way, this whole group of nuclear stocks started moving higher. Now, I wanted to discuss this with you, Joel, with the chat, because this is an interesting kind of setup here where you have these stocks that have obviously they've gotten really hot. I mean, Oklo was a $5.35 stock back on September 10th and is now a $16.50 stock. And we're starting to see this adoption from big tech companies where they're paying these companies to build or reinstate these small modular reactors. But when you go into it, and I was reading about some of these companies, a lot of them aren't like, they're like, oh yeah, this plant is going to be operational by 2030. And then we're expecting another plant by 2035. And it's very much down the road. So the trade is hot right now, but I don't think you're actually going to see the earnings and some of this, the money flowing into these companies for years down the road. So my question to you, Joel, is do I just buy them now and wait for 10 years? Or do I wait for them to come down before that point in 10 years from now? Like, I think these things will come down before then, but the trade is hot right now. It's kind of like the short-term outlook versus the long-term.
Short term, I mean, it's a rocket ship and it got a story and the story got started. And I think if anything we've learned in the markets over the years is when something gets hot, it can stay hot and it can stay hot for a long time. If you want to be, because I've used that theory, like, oh, well, it's not going to be till 2030 or 2035. You know what? People don't care about that. The bots don't care about that. They're going to keep buying and buying and buying until they find a preponderance of sellers. So if you want to be in it long term and you feel like you fear missing out, then you start to nibble and you make a commitment to buy it on a pullback. These are big moves. The moves could just keep going. What if the next company comes out and says they're using Oklo? So it's a hot story. You can apply the Uber theory where, okay, Uber got this big lift because
Did you do that
Tesla
on purpose?
wasn't.
Uber
Yeah,
Lyft?
yeah. I mean, Uber got the big lift. Yeah, you got me on that one because Tesla wasn't as far ahead. Well, you saw what the street thought of that, but the momentum's going. Trade your technicals. Would I be making a big investment here at 1670? Think it's going to $20? Well, then you use your risk reward ratios. If anything for Oklo, I'm not going to try and call any tops or make any big levels. You can just say the all-time high in it is 1880. So if that's what you're searching for, that's the next point, and that was back in May. The other thing too is if you're undecided on this, not long or trying, there's going to be a consolidation period. There's going to be a couple inside days. So maybe maybe if you put a couple lows in at the $15 area, and then, get a little bump up, then you have a place to take a trade. But right now, a little bit of consolidation would be great for Oklo Inc.
Yeah, so if I had my investor cap on, not my
Yes.
trader cap, my investor cap, my long-term holding cap, this is what I'd be worried about from EKS, is that the company, and not just Oklo, but a lot of these, nuclear small modular reactor companies will be burning cash for years, and more likely they'll do offerings, then the earnings will come out, and the earnings won't really show that much growth until, they get these things operational. So it's like, I just don't know if I want to buy now at $16, then watch it go down and sit through all that volatility for 10 years. Or like you said, Joel, I can just commit to buying on pullbacks, wait for it to come down a little bit. But if the trade stays hot, this thing could go from 16 to 25 to 30. And the next thing you know, I'm like, why didn't I buy this when I was talking about it? And I was looking at buying it below $10. And I consulted with my buddy that's in the clean tech space. And he's like, nuclear is the furthest one away. All these other ones are starting to pick up more steam in the near term, whether it be, solar or, whatever it is. So he said that, the nuclear space currently is overvalued because it's all down the road, and that he's like, there will be a time in the next few years where it will be a very attractive investment, but that time is not right now.
Really good
Good.
point here, made by a couple of our different chatters. I mean, you think they're licking their chops in an offering? I mean, they need to build more plants. They need to build out the infrastructure. They need to do these things. The stock at this level, maybe they'll slam something down people's throat at $14, and now they'll come in and buy it up. So that's one thing that you have to take note of. As far as technicals today, this is traded in the just slightly in the red. You have your high and your close right at the same area. It's near a whole number of 17. So let's see if you have some profit takers in that area. But once again, these biotech companies, they have something good. They get a price appreciation. They always do an offering. I think they would find plenty of people that would want to participate in the offering. But as we close things out here, folks, we couldn't be at any other better place than trading at the all-time high. We just made a new all-time high at 59.1975, getting a good jump on the day. So another fun show. Way to go today, Aaron. Tomorrow, guest host, a guy we haven't heard from in a long time, but always personable, always educational, always fun to be with. Jeremy Newsom will be joining us tomorrow morning as our guest co-host. And then Ivan Feinstath, always bullish Ivan, will be joining us at 8:35.
Nice, Tigress. All right. Well, thank you to everyone who tuned into the show today. We do have live trading starting up after this. Make sure to stay tuned for that. And please smash the like and subscribe to the channel if you have not already. Other than that, we'll see you guys tomorrow morning.